We're going to be talking about the different business structures for property investors, because that's all a common question. And of course, as you all know, it's one of the most important considerations when people start their business.
Yeah, absolutely. It's kind of like a house. If you've not got the structure in place, then no matter what you build on top of it, you're going to be doomed from day one. So getting your organizational structure correct is definitely something that people need to be doing. So in terms of buying in your own name versus limited company, that's the most common one. And obviously we've got partnerships, which we'll cover as well. But what are your thoughts as to what tends to be best? And indeed, what's your preference?
I think it depends, and I know that's not the answer people like to hear, but it does depend on the situation, the circumstances, the preferences, the exit strategy, what someone is looking to do. So some of the things that I think they should be thinking about and considering when deciding on which structure to use are things like how many people are involved. What's the flexibility of every structure? How easy is it to add people in and take them out? What are the admin costs involved in operating their particular structure? What are the tax costs and the tax consequences of each structure? What are the commercial considerations do we need to take into account when we're deciding to use a particular structure? Privacy is an issue, because obviously if you have a sole trader or a partnership business, nobody really gets to know who the partners are, and you don't have to disclose that information anywhere apart from obviously to your accountant and then filing your information to HMRC. But of course, if you've got a limited liability partnership, or if you have a limited company, then you've got the added hurdle of putting all the information up publicly with Companies House. So those are some of the key considerations amongst a few others that people need to be thinking about. Above and beyond that, of course, if they've got a company, they're possibly thinking about share options and alphabet shares. They should also be very clear on their exit strategy. Now, for somebody who's, let's say, 25 years old, looking to retire at 50, they'll be thinking, I've got 25 years to go, so I don't need to be thinking about my exit strategy. But I always think people should review their exit strategy on a regular basis, because right now it might seem like 25 years, but in 10 years' time, somebody might say, I'm doing pretty well now, I'd rather exit now. So it's good to bear all those things in mind.
Yeah, absolutely. Certainly agree with you there. So it's really just a case of kind of knowing where you want to get to, if possible, and then planning around that and regularly reviewing that. So I was speaking with a client the other day, essentially, and they'd previously been advised. So a married couple, no children, they don't want any children. All they want to do is to leave their jobs, earn about £40,000 each, and that's all they need to live off. They're more than happy with that. And they were under the impression that a limited company was the best thing for them. They'd spoken to their current accountant, but then since they've found out that accountancy fees are a lot more for a limited company, interest rates are slightly higher as well, and then they actually have to pay further tax when bringing the money out of the limited company, and they were previously unaware of all of this. So I did some rough calculations for them, and for somebody like that, in that circumstance, they didn't want to grow. They wanted a modest property portfolio, keep things really simple, no children, no inheritance tax issues. It's literally just when they die, it goes to whoever they leave it to. They were probably much better off keeping that in their own name than starting with a limited company. But of course, now they've got two properties in a limited company and they're in a bit of a pickle. So yes, do you encompass things like that quite often?
You're right there. And of course, one of the kind of key advantages or something investors and developers find attractive with a limited company, in fact, most general businesses find attractive, of course, is limited liability. But then if you're having to give personal guarantees, then you're losing that protection to some extent. So added to everything that you've just said, they've got that issue now to deal with too.
Yeah,
and of
absolutely.
course, the added compliance that comes with having a limited company.
Yeah, so in that situation, they should have kind of spoke to a property tax specialist to start with, so they got well-rounded advice that doesn't just focus on kind of one thing. It's not very well informed. So partnerships, what are your thoughts on setting up a partnership compared to just a husband and wife buying property in their own name? So I know there's a couple of advantages, but what are your thoughts around those?
I think it again, it depends on what the partners are looking to achieve. So, of course, if you have a husband and wife who decide to go into business and just buy properties, and as you say, they are jointly owned. That's not a partnership as such. So it kind of depends. Are you referring to having a limited liability partnership, a normal partnership, or does it not really matter?
Yes, it doesn't matter. So I know there's differences between a normal partnership and LLP in terms of you have to file your full accounts and things like that, and the capital you can introduce and bring back out again. But essentially, what one do you see most common, and which one has more advantages than the other?
I like LLPs, and you've kind of alluded to one of the benefits that I quite often promote, which is obviously having a capital account, and then the benefit of obviously being able to reduce that capital account as time goes on, which is a big benefit. Then, of course, you can add other members, ordinary members, into the LLP, and then let's say that they are your children. So let's say somebody's got a daughter, she just finished university, isn't working, and they could add her as an ordinary member and start paying her some income to get her involved in the business. So that flexibility I find always to be very useful. So I am a big fan of limited liability partnerships. How about you?
Yeah, see, I think I prefer normal limited companies. So it's much more straightforward. You've not kind of got to worry about. So if you got an LLP, if their earning goes above a kind of a crazy level and they have these big plans to grow big, then they're going to get hit with kind of higher rate taxes and things like that. Especially where people are kind of just starting out and they think, okay, yeah, I want to grow this massive portfolio. So I suppose, yeah, there's a real good argument for each of them, especially with LLPs. You've got a lot more flexibility on the cost you can put through. You can kind of put, even with your cars, that's a massive advantage to having LLP, is that you can put that proportion through, which you can't for a limited company. But yeah, I think LLP, limited companies are just a bit simpler. What are your thoughts on that?
Yeah, so I mean, if obviously the business has a car or a number of cars, you've got that, and then obviously there are other issues with a limited company in terms of benefits in kind, which aren't caught by the rules for a sole trader partnership or a limited liability partnership, which obviously offers the additional flexibility. So I guess it depends, and I have a pretty open mind towards whatever people want to do, and I kind of share with them all the different possibilities and let them choose. Now, of course, if somebody's into service accommodation, for example, Joshua, and they're buying lots of units, and there's a high amount or a large value for capital allowances claims. If you've got a limited company, for example, and they made £100,000 profit, and they've got £100,000 worth of capital allowances in their annual investment allowance, for example, they write off the taxable profits, and let's just assume that £100,000 is sat in the bank. Now, if they want to take that money out, they've got to pay income tax. Of course, they've got their personal allowance, but above and beyond that, whether they take it as a salary, bonus, dividend, they've got to pay income tax on it. Whereas if that's a limited liability partnership, for example, the £100,000 profit can be written off against the capital allowances. The 100 grand is sat in the bank, and the partners can now decide to choose whatever they do with the money, so they can spend it on whatever they want. So that again is an advantage which you have with a limited liability partnership, which you don't with a limited company. But that's obviously subject to capital allowances. Then you've got the added complexity, if I may say so, of considering, should I have a mixed partnership? So should I have an LLP with a corporate partner? How does that work? Obviously, there are certain rules, as you know, with mixed partnerships, which people need to be aware of. But if done properly, I think it's a good mechanism, and it opens up possibilities. So if it depends on what people are looking to do, is what I would say.
Yeah, absolutely. We've got a client at the moment. They've just it's an LLP, just in a capital allowances claim that's gone through, 40,000 capital allowances, so they won't be paying tax. They've only got one property, so they're not paying tax for the next 2 or 3 years on that income, which is fantastic.
Yeah.
In terms of the corporate structure, and setting up a kind of a mixed hybrid LLP, when do you find that tending to be suitable? Kind of what scale, and is it applicable to people who already have a property portfolio, perhaps in a partnership?
I think size isn't important to start off with, especially if they're starting up, because if they are reasonably ambitious, reasonably serious about growing their business, they'll very soon get to a stage where a mixed partnership, for example, may apply to them. So I don't always look at where they are today. I would say, okay, where are you going to be in 3 years' time, 5 years' time, 10 years' time, depending on how long they want to remain in business. From my point of view, and I'm sure you'll have a different view, the size of the business doesn't matter now. It's what we're going to do together over a number of years. What's your view on that?
Yeah, I absolutely agree. So a lot of people, they might think, okay, it's going to cost me so much money now to get this proper structure set up right. You know, I've only got one property now. Okay, great. How many properties do you want? Don't look at it as a cost today. Look at it as a saving for the future. Because effectively, it's kind of thinking as opposed to being in a fixed mindset compared to a growth mindset. And if you do have these plans of building this vast business empire, getting all of these properties, you need to be acting now as if you already have. And part of that includes getting the right structure in place and the right tax advice, essentially. Yeah, so I'd certainly agree with that. Even if it means perhaps 1 or 2 or 3 years of higher accountancy fees, higher compliance costs, a bit more work. If after then you gain traction, then it's really going to kind of start having an impact later on down the line. And I'm sure you would agree that putting all of this stuff in place later on, group companies, mixed partnerships, it costs a hell of a lot more later on down the line than it does to get that in place from day one.
Interesting you say that, because I was on a webinar a couple of days ago where somebody invited me to talk about property tax to a bunch of sophisticated property investors, and that was one of the observations I made. As in, if you do things in advance and think things through, it's going to probably be more efficient, more effective, and cheaper for you to do so once you've started something. And then if you want to restructure, it might cost you quite a bit of money. And there's no issue with that, because usually the fees associated with that should not be as high or as big as the benefit. However, if you do that from day one and you thought through things, you could avoid all that. So you're absolutely right. To restructure, reorganize, change things can be a costly exercise. And if a need arises for that, so be it. But if that was something you could have done earlier, then it's important that somebody has those options and they're able to fully consider that before they decide on their business structure.
Yeah, absolutely, completely agree with that. So I suppose.
So can I now maybe share some of the things where I think that people should be aware of? Because I know you said you're a fan of limited companies. So to make this interesting, I think what we'll do at times, without opposing views, just to kind of share as much as we can. And I think that will work well for our listeners and viewers. So some of the disadvantages, I'd say, from my point of view, of having a limited company is the first thing is if you've got losses, they are trapped in the company.
Yeah.
Which is obviously different for sole traders and partnerships. Above and beyond that, of course, I mean, you know this, that companies don't have an annual exemption, whereas obviously individuals do have an annual exemption. We've already covered briefly the issue of benefits in kind, and I guess that's going to be a whole separate video because that's going to probably take us an hour to talk about that and how P11Ds and all of that works. But that's something people need to bear in mind. We've also covered briefly about you've got the implications of double taxation. Really, the company pays corporation tax, and if you're taking their money out, you've got income tax to pay. Above and beyond that, you've got considerations in terms of annual tax on envelope dwellings. If a property is in a company valued over £500,000, and then there's no commerciality behind it, so that's something people need to consider. Then taking out dividends if profits aren't made and there aren't any retained profits is a further issue or a challenge people need to consider. Above and beyond that, if they have a trading element and then they veer into investments, and the investments form more than 20% of the entire activities, then they're going to jeopardize what used to be called, as you know, entrepreneurs relief. Now it's called business asset disposal relief. So those are some of the things that I would see as perceived or possible disadvantages to having a limited company. But of course, there are lots of advantages too.
Yeah, absolutely. So I suppose especially that's where a group comes into it. So you mentioned the kind of loss relief, essentially. So if you're individual, you can perhaps set it against previous income or other income, depending on what it is you're doing exactly. So with a group of companies, you can also do that as well, can't you? So you can offset losses in one company. So if you've got a trading business that's made a loss, but your investment business made a profit, as long as you've got that common corporate shareholder, you can transfer those losses over to get tax relief in the other company, which not many people know about, and it's a fantastic advantage.
Yeah, absolutely. So and that's one of the many benefits of having groups, and I think you and I have covered that individually elsewhere reasonably extensively, and that's another one for us to cover at some point in the future.
Yeah, absolutely. So in terms of kind of your parting comments, what would you say to people when it comes to deciding what structure to go for?
So I'd say think long term, think about your exit strategy, think about obviously if you've got children or you're going to have children and you're looking to involve them now or at some point in the future, how you would do that. The other things that we've said about adding in, be it investors, partners, JV partners, having that flexibility. If you've got employees and you want to give them shares, for example, again, considering the flexibility with that. If you've got cars that you want to run through the business, again, thinking about, do I claim mileage or do I have a partnership or a sole trader or limited liability partnership so I can run the car through that particular structure. Financing, how easy is it to get funding and which one gives you better rates? Of course, that changes over time. So, you know, Josh, that rates in a limited company are more competitive today than they were like 3 or 4 years ago. But you never know, that can change. So you need to think about that. We would already covered compliance costs. And of course, if you're a director of a company, then those additional duties and fiduciary responsibilities of a director, which aren't known to most people, by the way, need to be considered by people. And something else which I didn't mention earlier is I think people get confused very easily because they think the limited company is my business, so I can take the money as and when I choose. So there's not that clear differentiation, as in the company is a separate legal entity. So we like that from the point of view of limited liability, but we tend to forget, as in because it's a separate legal entity, there are certain things you have to do, and you can't just put your hand in the company's bank account and take the money out as you please. because you will have, you could possibly have negative connotations in the sense that you might end up with an overdrawn director's loan account and a Section 455 charge, which again, I'm sure you and I will cover on a separate video.
Yeah, absolutely. I definitely agree with that. So kind of just don't plan for today, plan for tomorrow, essentially, when you are getting your structure in place, and don't rely on kind of what other people are doing. Focus on what your situation is, speak to a professional and get proper advice. But, you know, as always, it's been a pleasure. Yeah, I hope you guys have enjoyed this. If there's anything that you want us to cover, any questions you've got, drop them in the comments. Let me or Shaz know. We're more than happy to help.
Absolutely.
Yeah, great speaking with you, Shaz.
Likewise. Take care.
Perfect.